Now, as you are aware of the fact that the Institute of Chartered Accountants of India, they have introduced 30 marks multiple choice questions and in their core subjects. And in Indirect Tax Laws also, they have introduced 30 marks multiple choice questions, which consists of independent MCQs and case scenario based MCQs. Now we'll be discussing they have released basically a booklet on MCQs and case scenarios. This booklet has been released, which is consisting of 100 independent MCQs and 30 case scenarios, and in which multiple choice questions has been provided. Now the institute has given only the answers, hint answers for the same. They have not provided for the detailed analysis of how they have arrived at that answer. For that purpose, we are making these videos. For each and every case scenario, we will be discussing what is the reasons behind the answers which have been given by the Institute of the Chartered Accountants of India in this, all the cases. So first case scenario we will be discussing now. So this is our first case scenario here. Now what it has been provided is Aspire Solutions Private Limited, hereinafter referred as Aspires Solutions. It's a private limited company engaged in providing multi-dimensional services to its clients through its office in Haryana, registered under GST. So this it's a registered supplier of services, and they are registered where? In Haryana. During the month of July, the information has been provided for the month of July. The following transactions were undertaken by the Aspire Solutions. Now first is import of certain cloud services from biscart.com for an amount of rupees 50 lakh rupees. So they have imported cloud services, and as you are aware, cloud services falls under the ambit of OIDAR services, that is online information database access and retrieval services. Now they have imported the services of 50 lakh rupees. So what we have seen is that if OIDAR service supplier is located outside India and if the services are supplied, one is non-taxable online recipient, those who are not registered persons, or the same is supplied to registered persons. It's supplied to registered persons, then reverse charge mechanism is there, and in case if it is supplied to non-taxable online recipients, the same is chargeable to tax under forward charge mechanism. Now here Aspire Solution is a registered person, so on this import of service, RCM will be applicable, reverse charge mechanism will be applicable. Now further it has been provided that there is an additional charge of 2% as equalization levy on such service in India, which is recovered from the offshore service supplier by the government. Now Indian government has introduced in this Finance Act 2020 2% equalization levy, which we have discussed in direct tax laws also. So here on 50 lakh rupees, there is a 2% equalization levy that works out to be 1 lakh rupees, which is paid by the biscart.com to the government of India. And biscart.com passes the taxes to its customers by charging them as internal policy. Now they are charging this equalization levy in the invoice. So here the import value, what will be the value of the taxable supply? It will be 50 lakhs plus 1 lakh equalization levy. So the value will become what? 51 lakhs. And Aspire Solutions will be liable to pay GST on the same under reverse charge mechanism. Then the next one is Aspire Solutions pays a sitting fee of 25,000 each to its 4 directors per month. There are 2 directors which are executive in executive roles, and they are withdrawing 2 lakhs each per month as salary from the company, and the applicable TDS amount under 192 of the Income Tax Act is deducted from such salary. Now they are we have seen a circular that if there are whole-time directors and they are receiving salary and TDS is made under section 192, tax is deducted under section 192. In that case, whatever services are provided by them, that falls under the ambit of Schedule 3. There is the transactions which are neither regarded supply of goods nor supply of services and not liable to GST. But relating to sitting fees, same is covered under section 194J. And on this sitting fees of 25,000 rupees, GST will be leviable under RCM. Here GST will be leviable under the reverse charge mechanism. So there are 4 directors. Then here the same is not covered under the ambit of, Schedule 3, these sitting fees, and will be liable to GST. And company is liable to pay tax under RCM. And third is Aspire Solutions paid for life insurance of its employees in compliance of its internal policy. And the amount of premium was rupees 5 lakhs. Here, the life insurance premium, the same is paid as per the internal policy, not under a statutory obligation. The same is not paid under statutory obligation. Hence, no ITC will be available of the GST so paid on the premium. Then Aspire Solutions provided consultancy services to its client, Zoom Corporation, based in Bangalore, and issued an invoice of 30 lakh rupees. This is outward supply. They have provided the consultancy services to their clients. Empowering India is a non-government organization located in Haryana. It is an NGO. And it aims at empowering the eligible companies to grow their business in India. Now, Aspire Solutions, being one of the eligible companies, received a subsidy of 5 lakh rupees from lump sum from Empowering India in the month of July. So, the 5 lakh rupees is a subsidy which has been received from NGO, but it is not directly relatable to any supply. So when the same is not directly relatable to any supply, it cannot be added to the value of the supply. Next one is the Aspire Solutions provided sponsorship services. Aspire is a body corporate. Now it has provided what? Sponsorship services. The same has been provided to Mr. X. It will be chargeable to tax under forward charge mechanism. And the value of sponsorship services is what? 5 lakh rupees. So they have provided sponsorship services to Mr. X, an individual, for an event organized by it in the state of Haryana. Now Mr. X has paid this amount of 5 lakh rupees to Aspire Solutions. And Aspire Solutions will be liable to pay GST under forward charge in respect of such supply. Then further information is what? All the amounts given above are exclusive of GST unless otherwise provided. Whatever amounts have been stated here, they are exclusive of GST unless otherwise provided. And there is no other outward or inward supply transactions apart from the aforesaid transaction in the month of July. There is no outward or inward supply transactions. Besides the above transaction, there are no further transactions. And the opening ITC for the relevant tax period is nil. So opening input tax credit is nil, opening ITC is nil, and subject to the information given above, assume that all other conditions necessary for availing ITC has been fulfilled. Other conditions have been fulfilled. Now, GST rate applicable on all inward supplies and outward supplies is interest rate supplied is 9%, CGST and 9% SGST, and interest rate supplied is 18%. So it's inward or outward supply, the rate of GST is 18%, and CGST is 9%, and SGST is 9%. Now, based on the facts of the given case scenario, choose the most appropriate answers. Now, question number 1 first is what? The GST liability for cloud services procured by Aspire Solutions from bizcard.com. As we have seen. Now, OIDR service supplier is outside India. Service is supplied to registered person. As we have seen, place of supply is location of recipient. Same is liable, that is in Haryana. Liable, it's import of service. Liable to be taxed under RCM. Now, what is the first statement? GST liability for cloud services procured by Aspire Solutions from bizcard is on bizcard.com. That is not correct. Since the services are online information and database access or retrieval service, and GST of 9 lakh rupees shall be paid by bizcard, that is not correct. It is nil. There will be no GST liability on transactions since bizcard.com is located outside India and services are provided electronically. That is also wrong because the place of supply here is in India. On bizcard.com, under forward charge and GST of 9,18,000 shall be paid by bizcard.com. Well, no, it will be under forward charge only when the same has been provided to non-taxable online recipient, otherwise not. And it will be on Aspire Solutions under reverse charge, and GST of 9,18,000 shall be paid. Now we have discussed that it will be on Aspire Solutions. What will be the value of taxable supply? Value of taxable supply, that is value of services, how much? It is 50 lakh rupees. Equalization levy is also charged. It is not a GST, so that will be also included in the value of supply, 1 lakh rupees. Okay, 51 lakh rupees will be the value of supply, on which IGST will be levied at rate of 18%. IGST will be levied at rate of 18%. So on 51 lakhs, 18% IGST will be levied, which works out to be 9,18,000. So here the correct option is D. The correct option here is D. Then the second one. The Aspire Solutions seeks your advice on taxability of sitting fees payable to directors and salary payable to executive directors. Sitting fees payable to directors is covered in ambit of supply. Okay, and it's covered in the ambit of supply and is taxable on RCM, whereas salary paid to executive directors, circular has been issued in this regard, that will be regarded as neither supply of goods, neither supply of goods nor services, not leviable to GST. Not leviable to GST. Okay. So what is the first option? Sitting fees paid to directors is liable to GST under RCM. This is correct. And salary paid to executive directors shall not be liable to GST. This is correct. So the first option is correct, but we can see the second option also. The total amount payable to directors, sitting fees as well as salary is exempt from GST. Well, this is false statement. Total amount payable to directors, sitting fees as well as salary is liable to GST under reverse charge on the base in hands of Aspire. This is wrong. And total amount payable to directors, sitting fees and salary is liable to GST under forward charge in hands of directors as professional income. So these statements are wrong. Only one's first statement is correct. Then next question they are asking is what is the amount of ITC available with the Aspire solutions for the month of July. So as we have seen, the opening balance is nil. Opening balance is nil. For the month of July they are asking. So one is import of OIDR service. Import of OIDR service. GST paid on the same is admissible as ITC. So on 51 lakhs we have paid a GST, IGST of 18%. That was 9,18,000 rupees. That will be admissible as ITC. Other one is about the on directors' fees. Directors' sitting fees. How much sitting fees was to be paid to each director for the month of July? It is what? 25,000 rupees. It is 25,000. 4 directors were there and 18% is the GST. So 18,000 will be the GST element consisting of CGST 9,000 and SGST 9,000. 18,000 is this. That will also be admissible as ITC. And GST paid on insurance premium. GST paid on insurance premium is blocked under section 17(5) because the same has not been provided under statutory obligation. So the input tax credit which will be admissible will be what? 10 lakh and 9 lakh and 36,000 rupees. It is 9 lakh and 36,000 rupees. C is the correct answer here. Okay. Then compute the value of the outward supplies made by Aspire Solutions. So we have to compute what? The value of outward supply. So computation of value of outward supply. One is, we have seen the consultancy services. What is the value of the consultancy services? Consultancy services is 30 lakh rupees. This subsidy from NGO will not be included in the value of supply. And one is sponsorship services, 5 lakh rupees. So it is consultancy services. That is 30 lakh rupees. And sponsorship services. That is 5 lakh rupees. So here the value of taxable supply will be how much? 35 lakh rupees will be what? The value of the taxable supply. Now they are asking, compute the amount of GST to be deposited in cash by Aspire Solutions for the month of July. So in relation to what? Services received by Aspire Solution, taxable under RCM. Taxable under RCM. Taxable under reverse charge mechanism. Here, same is taxable under reverse charge mechanism. Okay. So this tax is to be deposited through what? Tax is to be deposited through electronic cash ledger. So for, one is cloud services, there's 9,18,000 rupees, and other one is the director fees, 18,000 rupees. So in there, 9,36,000 is the same, is to be deposited through e-cash ledger, that we remember. Now what is the outward supply? Value of outward supply is, that is 35 lakh rupees, on which GST is charged, say at rate of 18%. One is the 18% on 5 lakhs. Actually, CGST and SGST is levied, that is on sponsorship. So it works out to be 45,000 rupees and 45,000 rupees. And on 30 lakh rupees, IGST is levied at rate of 18%, that is 5,40,000 rupees. So on 35 lakh rupees, the liability works out to be how much? 6,30,000 rupees. This is outward tax on outward supply. But we have input tax credit available to the extent of 9,36,000 rupees. So this credit can be utilized for payment of this outward tax liability. So here on outward supply, no tax is required to be deposited. But on RCM, tax is to be deposited through e-cash ledger, and that is 9,36,000 rupees. So they are asking how much amount of tax is to be deposited in cash. So the answer will be 9,36,000 rupees. So you can verify the answer. Here, first is 9,18,000 rupees will be the liability of GST, which Aspire solution is to pay on cloud services under RCM. Sitting fees paid to directors is liable to GST under reverse charge, and salary paid to executive directors shall not be liable to GST. 9,36,000 we have seen, and 35 lakhs, and 9,36,000 is the amount of GST to be deposited in cash. So this was one of first case study which we have discussed. Basically, we have made separate videos for what? The other case studies also. And we have provided multiple this independent case studies and multiple this case scenario, independent MCQs and this case scenarios separately we have provided through our portal also. And these MCQs and the case scenarios, detailed discussions, detailed analysis and provisions are covered there. So you can go through the same also and understand things. And these are very, very important ones from examination point of view. So this was our discussion about the first case scenario. Okay, this was our first case scenario, and other case scenarios we will be discussing in our other videos. Thank you very much.